Okay, I think now we can start with journals. So now we'll be using the same transaction that we recorded before. And now we'll be recording this transaction now in the journals. So previously I did mention that recording transaction on your accounting equation was the most difficult process during month end, because now you have to come and look to have to calculate your bank balance. Every transaction that I've got bank, business bank recorded on, or debited or credited, we need to indicate, okay, we've got this much currently as our opening balance. Then we're going to say minus the 20,000 minus 14,000. Continue to go down. Here we've got another bank, which is credited, so it's another minus. So this process was all time consuming. So as a result, your journals were then formed to then say that we're no longer going to apply this or record transaction in this accounting equation. We're then going to create a journal to record all the transaction in, which is going to summarize specific type of transaction that normally repeats within the business. For those accounts that normally are affected for these specific types of account, we are going to create a specific column for these particular accounts. First, every time when we are rendering a business, we will be servicing our clients. After servicing the clients, they become debtors to the business. And as they become debtors, it means that the amount they owe us, they will then have to pay us. So this means that we are going to have regular repeats of transaction where customer will be paying us the amount they owe us for the service that we have rendered. So let's create a business cash receipts journal. So this means that part of the cash business receipts journal is then going to have which columns? Business bank, which is being debited every time you receive money. Business client or business debtor, which is being credited when you're doing what? When a customer settles that account. So this means that now we have got these two columns. Then what about for the other types of account when we receive money? Since we do not always receive money from these other accounts, we're then gonna just create a column called what? Sundry. So your sundry column will then record all the transactions that affects other account in which you are receiving the money from. So this means that when you look at this business cash receipts journal, your business bank is being debited, this is being credited, also the sundry's accounts are being credited. And automatically we said that the VAT output is what? Credited. The reason I'm explaining this is because when we go post the total in your ledger, the total of your business bank, because this account is being debited, the total will be debited to the business bank account. Because this account is being credited, the total of this account will be credited to the business debtors control account. We are not going to cover the business debtors control account. It is there in your textbook, but if you want to look into it, you can look into it. But we're not going to cover that. And then another journal was created, your cash book payment journal. The same thing. Every time we are paying, we're recording on your accounting equation. Comes month end, we need to calculate the balance. It's the same thing. We need to look. So we created the journal. A regular transaction that repeats, they all affect your what? Business bank. Your business bank is always credited when you're making a payment. And then your supplier account is being debited every time you make a payment. And these are regular payments that we're going to be making to repay the supplier for goods and services that we received on what? On credit. So this means that we need a column for creditors. Every time we buy, we'll be charged VAT. So this means that we also need a column for what? VAT input. Then for things that we do not regularly buy, we're gonna create an account, a column for sundries. Then the name of the account will be in details to then explain which type of account are we actually paying for. So this means that your cash payment journal, your business bank is being credited, the rest of the other accounts are being what? Debited. Trust cash receipts. Every time you receive money on behalf of your clients for future legal services or from your client for future legal services, your trust bank is affected. Money goes to a trust bank, and then we say that you create a what? A trust credit account to indicate who does the money belong to. So this means that now your trust cash receipts journal will include these two. But it is not always the case where you receive money from just your clients. If you go and service and render a service to your client and win a case, and there are settlements, you will receive money from other attorneys on behalf of your client for the case that you just won for your client. So therefore, we will need another column. So we then call it what? Sundries. So all the money that you are receiving on behalf of your client from other attorneys will be recorded in what? Sundries. And then we'll indicate the name of the attorney under details. Your trust payment journal is similar exactly to this. Because every time you make a payment, your trust bank is affected. We need to indicate from which client's account is the money going out from. If you are paying another attorney, you also have the same sums. But the treatment are what? Are opposites. So for this one, which is the cash receipts, which are going to be tested on, your trust bank is being debited as money is coming in. So this means that the total sitting here, it goes to the debit of your trust bank. The trust creditor is being credited according to the accounting equation. So this means that every time we record a transaction here on the client's trust credit account, we're going to credit that client's account. If it's sundries, we're going to credit the other attorney's account. Fees journal. Every time you render a service or account to a customer, which is to send him an invoice, they become a debtor to the business. They owe the business money. So this means that business client's account is affected, fees account is affected, VAT output is affected. Then a journal is created for every time you bill the client, with the same accounts affected being what? Columns. Are we together in this part? So this means that your business client, which is the business contract, it's always what? Debited. This is always what? Credited. Also, this is being credited. So this means that when we create a ledger account for fees, all records here will be transferred to what? Will be transferred to the fees account. All the total here will be transferred to business debt account. All the total here will be transferred to the VAT account. And then general journal. We said for general journal, all transaction where the business is buying goods on credit. Because in an attorney practice, you do not have what you call a creditor's journal. It means that those transactions will be recorded in what? General journal. And they will follow the same principle of your accounting equation. Those that are debited will be written first. Those that are credited will be written lastly. So this means that you always start by writing the account that is being debited, followed by the account that is being credited. Do not start with the account credited and then followed by debited. It will be an incorrect principle. And then we also mentioned that on your general journal, we said on the general journal, you are also recording adjustments of accounts where you cannot be able to make them in the other what? Journals. If the business makes a mistake when recording a transaction, it is fixed in the general journal. When a customer can no longer pay us, we cannot record in the other journals, but we need to make an adjustment to the customer account that he will no longer what? Pay us this money. So all of those transactions goes to your general journal. If you are charged interest, we need to make an adjustment to the money that we owe the bank or to the business creditor. So all those adjustments are made in your general journal. And then lastly, the transfer journal. Every time you transfer money from business bank, from trust bank to business bank, there should always be a record on your transfer journal to indicate which from which client's account did the money came from and to which business client account was the money used to settle. So this is your transfer journal. It is always the same. Debit, trust client, credit, business client. It will never change. And you're gonna come across it throughout all your tests up until the exam. It will never change. But I still have students still failing the same account that does not change. That T, that drawing that we did to say you've got business debt, you've got trust debtor, how much money you're supposed to transfer. Those amounts that are being transferred, those are the amount that you're supposed to write here, not the amount that you're owed, the amount that you're transferring from this client's account to settle the business account. That is the same amount that we're writing over here. So let's quickly record all this transaction. We've already covered this in our previous session. So we're going to be following the same transaction order, which are currently over here. So the first one was Lucy Lauren withdrawing 20,000 from your account. So this will be recorded over here in the cash payment because she's transferring money from a bank account. So you're going to indicate the source document that this is an EFT. Where you do not have, you can improvise and write something. But in the exam, I hope that they do not bring the source document. Or in most cases, they do not bring them. Normally, this place is blank. But if it does come and you do not have the source document number, if it's a payment, just write EFT. If it's through business debit card, just write DC to indicate that it's a debit card. If it's via electronic funds transfer, that's still EFT. So you're going to write EFT. For all your receipts, just write business receipts because you're going to have a trust receipt and a business receipts. So indicate BR on the document number. In most cases in the exam, this is blank for you guys. So you don't have to worry much about that. So here under detail, we'll write the name of the account affected, which is drawings. Then indicate the total under sundry, 20,000. And then the same thing under business bank, 20,000. So you record on the accounts affected, similar to what we did on the accounting equation. But we said for those that do not have a specific column, you record in what? Sundries, the amount. The account, you write it under details. Number two, paid 14,000 via EFT as rent for the office. So this means that here we come and indicate that this is what? For rent expense. The total amount paid is 14,000. And we went and said that there was VAT included in this amount. And the VAT was 1,826. Then the total rent expense itself, which is the VAT exclusive amount, was 12,174. Got it correct, right? Okay. So this is how you record. You are just transferring the normal way that you record transaction on your accounting equation, but now to what? To specific journal. If the transaction does not fit within any of the journal, it's going to a general journal. Okay. Completed divorce proceeding for Toby Tyler, accounted to him 32,890. So we went and say business clients, VAT output, fees. We have a journal for that, which is your fees journal. So you're gonna come and indicate on the fees. When you account to, you are sending an invoice. So you can either write IV for invoice, IN for invoice, depending on whichever, or just write I1, invoice number one, invoice number two. It will be all up to you. And then the customer name is Toby Tyler. How much did we charge him? 32,890. The VAT, was it 3,000 or 4,000? How much? The VAT amount, 4,290. 4,290. And then the fees, is it 28,600? So you are just transferring everything that you have from your accounting equation to here. Any questions? Is this one complicated? It's not complicated, right? Okay. So I'm just going to be reading the transaction and then we're going to just be recording. Purchase stationery on credit from ABC Stationer, 11,000 excluding VAT. It is not a payment. There is no payment involved, so it cannot go to your cash book payments. It is not a business client. It can go to fees. So this means that it's going to your general journal. So on your general journal, we are buying stationery. We said that the accounts affected previously was what? Stationery and business creditor, then followed by VAT. So which of the accounts were debited? Stationery and VAT input. So you start by writing those that were debited. Indicate on the 10. When you record on your general journal, you create something called a journal voucher. It's just a smaller document that you just write the description of why you are recording this transaction on your general journal. So on your stationery, you recorded it at how much? 11,000. And then the VAT input was recorded at 1,000. How much? 650. And then this means that your business creditor was credited with 12,650. So this is how you record your transaction in your general journal. After that, you put a narration. Why is this transaction recorded here? Just a smaller description, just to explain why is the transaction recorded in your general journal. This is the purchase of what? Stationery on credit. Or you can just write credit purchase of stationery. You won't be marked wrong about the description as long as your description explain or summarize the transaction that took place. Okay. A new client, Romeo Ronaldo, makes a direct deposit of 40,000 for future legal services. We say that this is a trust account, trust transaction. So we go to our trust cash book receipts, indicate on the 10, we issue a trust receipts to Romeo Ronaldo, and the money that we received from him was how much? 40,000. And it's also a what? Trust creditor to the business. And that's it. Paid entertainment cost of 2,500 with the business debit card. This was for celebration for dinner. So we're making a payment. So that's your business cash book payment or payment journal. So we come and indicate document reference, debit card 01, account affected, entertainment. Every time if you're not paying your supplier, you write the name of the account affected. But if you are paying a supplier, you write the name of the supplier. Are we together on that part? If you are paying a supplier, you write the supplier name because the transaction will be written under what? Business credit. When we read, it's going to indicate that we paid a business creditor, which is, then the name will be under details. But for the rest, it will say that we paid the following accounts, and the account is the following, which is under details. So here we're paying for entertainment. The total is 2,500. 2,500. Even there was VAT, we cannot be able to claim it back. So we record this at a VAT inclusive and not show what? We do not show any VAT amount. Okay, Julie Jube, attorneys informs Lauren attorney that she is insolvent and makes a direct deposit of 40, 0.45 cents in a rand, which is 45 cents to the amount owing. The remaining debt must be written off. So this means that now this transaction was recorded. The accounts that was affected was what? For receiving the money, we went and say business bank and business client. So we go to our cash book receipts. So you're gonna indicate on the 17th, I am receiving money. So I issue a business receipts. The client's name is Julie Jube. The total amount that I'm receiving, 17,000 from a debtor, and it's also coming in my business bank account. The same accounts that are affected in your accounting equation are the same affected over here. Then on the same day, there is an amount that is no longer receivable that we wrote off, where we went and say we are debiting credit losses, we are debiting VAT input, we are crediting business client. This money is no longer receivable. So that's a non-cash transaction. So it can't go anywhere in our what? In our business cash receipts or payments. We are not charging the client, it can't go to our fees. This is not trust money. So this means that the transaction goes to your general journal. The same accounts that were debited, you start with them and then followed by the account that was credited. So over here, we debited credit losses as 18,174. And then business debtor was 20,900. The difference was 2,000. How much was the difference? 2,000 from a previous record, 726. So this is how you record all the accounts that are debited. You just record the amount on the debit side. All the accounts that are credited, you just record the accounts on the credit side. Do not go and write DRCR on that side. You indicate by putting the amount on the debit or credit, whether this account is being credited or being debited. It's always. We start with the account debited and then followed by account credited. Okay. Purchase the new computer for secretary on credit from office equipment, 10,925. We said that the accounts affected equipment, business creditor, office equip, and then our VAT input. Account debited, equipment, VAT input, account credited, business creditor, office equip. So this is on credit. It means that it goes to your general journal. So over here, you then have the transaction. The total that we owe 10,925. We said over here it's 9,500. And then this means that the VAT input was 1,425. And then your narration, new equipment purchased on credit or credit purchases of equipment. Then this one, we're gonna leave it for now as well. We're not yet here. We're gonna skip this one for now, but let's go that side, finish the rest of the other transaction. Accounted to Romeo Ronaldo for legal services completed. This goes to your fees journal. I've already explained one similar to this. Here's your fees journal. So we charged him 46,000. That's how much he owes us. And the VAT amount was 6,000. The total fees was 40,000. Questions? Yes. Oops. Something is off here. Is it not 1,000? Okay, thank you for the correction. So this is 1,425. So the first one, we just recorded it. So now I'm moving to be Taylor settle his debt with a direct deposit. So we went and say business debit, business bank, credit what? Business client. So this means that now we go to our cash receipts journal, indicate on the 24th, we issued a business receipt to Toby Tyler. He's settling how much? 4,890. That is the amount that we recorded on our accounting equation and indicate that he is a debtor to the business. If he was in a debtor, we're going to record the amount in what? Sundries. Okay, bank charges amount to 506. So bank charges will come here indicate on the 29. Is it 29? On the 29. So the reason I wrote BS, I'm going to explain. This is something we're going to cover in Learning Unit 2. You will not be aware of the total bank charges until you receive your bank statement. So in a business environment, we perform something called bank reconciliation on a monthly basis, where we get to identify any discrepancies between our business bank account and the bank balance that is being on the bank side, which we normally use a bank statement to check and do the comparison. So this means that this will be the time where you will also identify the total bank charges that the business is charged. So this means that the source documents for bank charges will always be your bank statement. And then you're going to indicate the total bank charges that we charged. It's 506, which 66 Rand was VAT and 440 was what? Was the actual bank charges cost. On the same day, you paid salaries of staff via EFT. So this means that here we're then going to indicate that we paid 127,000 and also on sundry 127,000. There is no VAT because these are tracked income tax. And this then concludes the normal transaction. Now we move to the transaction where we did talk about transferring money from what? Trust bank to business bank. You recorded in your accounting equation that the total money that was claimable for the trust was 113. So we transferred 113 from trust to business. So this means that money will be received in your what? Cash book receipts. So this means that here on your cash book receipts, you'll indicate on the 30th business receipts, trust, bank. And then the money will be recorded under what? Sundries. So this is how much? 113,000. There is no VAT, 113,000. Then, because we transferred now money from trust bank to business bank, we now need to record from which client was the money coming from and to which business account was the money used to settle. So this is where your transfer journal comes in to say that the first client was who? You have that lines that we drew previously. Is it Salis? No. I'll just write SS as well as this side SS. Then the narration, transfer of monies due. That's it. Then how much was transferred from Salis no account? Was it 45,000? And then 45,000. Then we also had another account client that was Toby Taylor. So I'll just write TT. So this as well, the total amount claimable was it 28,000? The narration is the same. And then the last client we transfer money from is Romeo Ronaldo. The total money 40,000. So on this particular account, you're only recording the money that you took from the client's account to the business account. Yes? It's 28,600. Is it correct? Okay, let's confirm. Some are saying it's not correct. So the clients have only 28,000 in their business, in their trust creditor account. And you went and charged them 32,000. So we are only able to claim the whole 28,000. Okay, that concludes recording transaction in your journals. Any questions? Questions? Yes. You received an invoice from for the work you've done on your behalf. So when you receive an invoice from another attorney, it means that he's rendering a service on behalf of you, but on for who? For your client. So that invoice goes to the trust account. Yes. So your client is the one liable to pay. Yes. So this means that when you receive the invoice, if in most cases, so let me explain this in the correct way. In most cases, there are two situations. There is a situation where your client will have money in the trust account. So this means that the invoice will be recorded in the trust account. But if your client does not have money in the trust account, you as the attorney will be liable for those fees. Then they will go to the business bank account. Then in your business books, You will then create a business debtor for your client. You will have to pay that other attorney immediately the moment he gives you the invoice. Whether your client have money or does not have money, you'll ask your client. If the client says, I do not have money right now, you can then pay the money over to the other attorney using your own money. And then you create a business debtor in your books to say that this client of mine owes me this much. Then the client will settle with you. If the other attorney says it's fine, let's wait for the client, and the client still does not pay, you will still be liable to pay the other attorney. On your side, it will just be a credit what? A credit loss. Yes. Okay. This concludes posting transaction in the journals. Yes. Which ones? Or this, the general journal. Which one? Journal voucher number. Payments. This you can create your own source document number as long as they indicate it's a source document for payments. So the source documents for payment it's EFT, use of debit business card, check, which is C. You can just write C, and then bank statement. You can also use bank statement as an indication of a source document where you are recording debit orders. So those are the type of source documents. So for your exam, you're not going to be required to record this. So, but please know them just in case. I don't know who your examiner for this year is, just in case you included that in your paper. So just to be safe. Yes.